All right. What is up, my peeps? Joshua Smith here with another GSD Mode podcast interview. And we are joined today by a repeat guest, a good friend of mine, Jim Remely. Welcome back to the podcast, brother.
Hey, man, I'm super stoked to be here. It's always a pleasure as the number one guy in the game with Joshua here.
Yeah, nah, man, it means a lot, dude. And I love, I mean, anytime that I get a chance to talk to you, to mastermind with you, I love it because you have so much experience in this industry. And just to, I know you've been on before, but just for our guests that maybe don't know your backstory. So you jumped in the business at 19 years old. Within a year, built up to 150 listings. That skyrocketed, being the top 1% nationwide. Then from there, by the age of 24, started your first brokerage. Built it up to 17 offices, which then became the largest independent brokerage in the state of Oregon. Recently led one of the largest real estate firms in Oregon, over 3,000 transactions on an annual basis, and over 1.4 billion in a single year of sales.
Yes.
And now today, I mean, you're still involved on the brokerage side, but you're in addition to that, coaching brokerage and owners from all over, coaching agents from all over. So you know, what I love about jamming with you is, dude, you're a dude that's done it all, seen it all, had success in all fronts. And those are the guys that I love to learn from because they're, you know, you're so well-rounded, man.
Thank you.
So let's begin, because I definitely want to get into the brokerage side. So for those that are team leaders, broker owners, from recruiting and retention, all of that stuff. But, you know, first, maybe let's begin on the agent side.
Yes.
You know, because, I mean, man, we are in a tough, challenging market right now. A lot of agents that are struggling.
Yeah.
You know, what are you seeing? I mean, you've been through a lot of markets. You've been doing this a long time, whether the great financial crisis, whether 9/11. I mean, you've seen a lot.
Yeah.
You know, what are you seeing that is different with the market that we are experiencing now today?
It's the first time. I mean, I've been through 5 down cycles in 32 years in the business. So I've been through some definite ups and downs, but this is a unique animal. And the uniqueness about it is that we've got a market that was not by itself faltering at all. Our market was super strong in real estate. And what happened is the Fed stepped on the neck of our business and said, we're grounding this into the ground. And so what's happened is it's not a buyer issue. It's not a seller issue. It's the Fed saying, we're just going to slow you down. So the challenge for us right now is that in a typical downward cycle where you would see interest rates climb to this degree, typically prices would fall dramatically. And you'd have this collapse of pricing. And we haven't had that. The simple reason is we're at a 40-year low for inventory. And the reason for that is because, you know, if you look at, I think it's over 80% of the loans in America are under 4%. So very few people are going to come to market, sell their house, and come into a new mortgage at 7%. So you have this, I call it a vapor lock. You've got buyers that are priced out and you got sellers that don't want to enter the market. And we're just stuck here for a minute. Now, that doesn't mean there's still not real estate being sold. There's still a lot of real estate being sold. But we're in a market where it's have to sell, not want to sell. And that's a different market than we're used to. And so that's where we're at. You just have to come to that realization and say, okay, based on that, what am I going to do about it? I can't change the reality, but I can certainly change my reality and create my own economy. And the way I do that is by changing my actions and changing my focus.
Yeah. I couldn't agree more, man. I mean, the two things that I see stifling more agent success right now is just, I mean, number one, some of them aren't willing to put in the work. And right now we're talking before we hit the record button, it just takes more work, man. But then two, you know, that action shift, that strategy shift.
Yeah.
You know, so what are you seeing, you know, with your agents and your coaching clients and agents that, you know, you work with inside your brokerage? Like, what are some of those strategy shifts that they're having to make today? Because as you said, it's not a want, it's more of a need to buy or sell in this market.
Yeah. You have to, the pivot we all have to make, I think, is you got to say, I've got to dig deeper into my sphere of influence. And then I've got to accept that my sphere is not big enough now. So when we say 80% of our business is coming from our sphere, and 2 years ago, it would have been a 10-to-1 ratio. Every 10 people in my sphere that I'm contacting 20 to 50 times a year is going to result in one sale. Those numbers don't work now because it's not going to be the 10-to-1 ratio. It might be 15-to-1. It could be 20-to-1. now. And that means that if my database was 300 people creating 30 transactions 2 years ago, it might mean I have to grow that quickly to 450 or 500 to get the same result. And if I'm not willing to go out there and fill that gap and find people to add my sphere through open houses and talking to neighborhoods and talking to sphere members and doing all the things that we have to, not sphere members, but potential sellers, as to say, pre-foreclosures, all the things that are out there, that's where I'm going to fall apart. If I'm just going to sit there and say, I'm going to wait for the market to come back to me, it's not coming back anytime soon. So we've got to create our own market by growing our audiences so we have more people to talk to. And of that, you're going to have more opportunities to get at bat. That's the only solution. You got to open up your audience size, period.
Yeah. Yeah. When this first started falling off, about 18 months ago or so, I started working with my agents because here in Phoenix, I mean, we fell off fast, meaning our market dropped by 39% in transaction volume pretty quickly, and in my mind, I mean, it's the first time in my lifetime I've experienced this, in the 18 years I've been doing this in this way. But it, just made sense to me from a numbers game of, okay, if there's 39% lesser people willing or able to transact in this market, that means we need to then hedge every lead source that we have by 39% more leads, 39% more conversations for the same damn result.
The same thing, right? It's exactly the
same. But then from there, are you finding, because again, when you mentioned that it's not so many people that want, but then that have a need, are you finding certain things to be more effective? Like you mentioned, notice of defaults with short sales or absentee owners or going after certain investors. I mean, are there certain targeted audiences that you're seeing that are more likely to transact in this market?
100%. In 2023, the number one seller group by far is the age group of 45 to 55 people. And that's kind of it's my age. I'm 53. So it's the people that have kids are leaving the house. And here's the biggest thing. They're in the middle of a life change. Either they're retiring, kids are out of the house, their income has grown. But the key thing here for these people is that the vast majority of them have either paid off their house or have large equity positions in their house. So they're not as interest rate sensitive. So what they look at when they look at this market is they look at opportunity, because most of those people are move up people. So they're not just buying their first house, they're moving up to the second house. And this is what I call the delta opportunity. The delta opportunity is if I own a house, let's say in my market, that's 350 to 500,000 kind of a starter house. And now I have the opportunity to go from that to 500 to 750. I'm moving up, right? But that market in my area has taken a little bit of a hit, not as much activity as the 350 to 500,000. So now as a buyer, when I move up to that, I have more negotiation power because there's less buyers in that market pool. So now I can hit the sellers on price. I can hit them on closing costs. I can negotiate a much better deal. But my price range, the $350,000 to $500,000 price range, is still red hot. Still getting multiple offers because there's very low inventory. So now I've got strength as a seller and power as a buyer. It's a unique position. And when we educate the people that are in that age group, the 45 to 55, we're the most active sellers today. That's where we can get some wins because we can help them sell and help them buy on the other side. So I think that's the hot spot right now.
Now, when you're targeting those individuals, are you finding more success going after them on the list side or going after them on the buy side, meaning like doing open houses in the communities that they'd be moving up to, doing Facebook ads with homes that would feature what they'd move up to, or, circle prospecting, door knocking, targeting, calling them on the list side? Or is it a combination of really both in this market climate?
Definitely a combination of both, as it always is. But I'll tell you that I think the secret sauce with that is when you're looking at people that are living in their house and targeting, and here's the targeting. When I'm doing targeting, if I'm doing like mailings, which is kind of a specialization for me, and I'm going to be targeting people that have owned their homes 15 years or more, because most of those people are going to fit into that category. And when you own your home 15 years before you've been paying on for 15 years, your mortgage is very small to begin with, or it's non-existent. And they're probably in that 45 to 55 age group. But when I'm looking at that group, my messaging in a letter, which would be a short, very sweet letter, not a postcard, but a letter, is going to be, hey guys, if you've ever considered selling, but here's the keywords, don't want to put your house on the market at this time, I would love to talk to you about the buyers that I have that I'm working with that are looking for things that are unlisted. Again, I'm not asking you to list your property, no interest in that. But if you have ever considered selling and you don't want to put your house on the market, let me have a conversation with you. Here's the thing. There's a huge amount of pent up seller demand that's in our market right now. These are exactly the people we're talking about that would sell. They just don't want to go through the hassle factor and all those things that go along with it. But it was just like me. I sold my house a year ago. 6 months prior to me selling, I would have sold it if I wasn't on a realtor already. And somebody came to me and said, Jim, would you sell your house for top dollar if I had a buyer? I know you don't want to list it right now because you're building another house, but would you sell it if I brought you a buyer? I'd have said yes. Not one realtor in my neighborhood ever sent me a letter like that. But if they had, that would have been an opportunity for me and for that realtor. So those are the kinds of things you got to be doing. You got to be, looking under these rocks for these opportunities. On the flip side, when you're talking about like ads, I would be doing targeted ads on social, and my ad would be a constant 24/7, 360 ad grouping for the move up category price. So if your move up category price is 500 to 750, then my ad's going to be see every home in the Phoenix area from 500 to 750,000 by clicking this link. And then there's either some kind of sign up form or something like that, so that you're capturing that seller group, that seller / buyer group.
Yep. No, I love that, man. I love it. So then what do you think it is that is with do not want to put your home on the market?
Yeah.
Like, is it just a convenience thing with the era that we're in and not having to want to go through the headache? What do you find from the psychology of that just seems to register so well with this subset of the population?
One of the things that we're finding is that they don't want to deal with the deferred maintenance that they have on the house. That's one big thing, is that they're like, you know what, I don't want to go through the hassle. I know I need to get it all dialed in. I got to get the carpets done. I got to get the roof fixed. I got to get this, that, and the other done. And I just don't want to do it. I'm not in the mindset to do it. And so it's just not something that they necessarily want to do. But this is where the opportunity comes in. If you don't put your house on the market, leave it as it is. We'll come in and buy it and we'll do the work. So that is a convenience factor. It's no different than like, it's almost thinking of yourself as being the iBuyer alternative. A lot of iBuyers have gone away because of the market conditions, but you're almost delivering an iBuyer experience without the discount to them, which is what a lot of people like. They like the idea of not having to go through the hassle of home showings and everything else.
Yep. Yeah. And as much as our industry hates, or seems to say that they hate, the iBuyers, the open doors of the world. I mean, the one thing that they proved is there's a market for it. Some people just want that convenience. In my market, maybe not today, but for a long time, and there's about 10% of sellers that would just go that instant buyer option,
No question.
and take lesser, but just that convenience factor was huge for them.
Exactly. I mean, it was working. The model was working, right, for a long time. Another category, when you're talking about categories to go after, in my opinion, and it creates more of a serial client, which I'm all about, the serial clients where I have to sell myself once, but now they're going to do business with me over and over and over again, would be the investor pool. But I'm talking about not like institutional investors, but more of your investors that are buying, duplexes or triplexes, fourplexes, sixplexes. The approach for me for that is to target people that have properties for rent now. So you're looking at people that have properties for rent, and the call to them is to say, hey, Joshua, I noticed you have a property for rent on Craigslist. I saw the sign driving by. I know you have a vacancy there. Quick question, have you rented the property yet? You'd say, maybe not, doesn't matter. I said, well, the reason I called is I was just wanted to see if you had any interest at all in selling that property or knowing what your rate of return is on that property now that you've owned it for a few years. They're going to say yes or no. If they say no, which 9 times out of 10 they're going to say no, maybe not, maybe out of 100 they say no. Most of the time they're going to say no. If they say no, I'm going to say great. So if you're not selling, let me ask you this: would you be a buyer if I had a great opportunity for you to have another investment just like the one you have now? They say yes, because who's going to say no to that? For me, I'm going to always say yes to that because I am an investor. I'm going to say, yeah, if you bring me a great buy, I'll listen to you. Now I'm going to say, great, I'm going to put you in just my little group of investors. I send you the hottest buys to every week. I'll just keep you abreast of everything that comes up. I'd love to shake your hand and have coffee with you someday, but we'll get to that later. I'm just going to add you to my list today. That sound cool? You say yes. Now I've got you in my list. I'm going to just tell you a quick story about that real quickly. 2 seconds.
Yep.
I had that exact call done to me. Guy calls me and says, Jim, I see you own an RV park. You interested in selling? I said, no. He says, well, are you interested in buying any others in case I have something to come up? I said, sure, I'd always look at something. 6 months later, I'm on a beach in Florida during COVID, by the way, because that's the only place we could go to the beach, Clearwater, Florida. The guy calls me and says, I just listed this RV park. Are you interested? I said, yeah, I'm interested. Long story short, I bought the RV park, which I own today, because this guy was prospecting, cold calling me as an RV park owner using the exact same script I'm telling you guys to use now. This isn't rocket science. It works, right? And I'm still on his list today, and he's still giving me buys all the time. So that's another strategy right there. Just think if you could create a situation where you have 10, 15, 20 buyers that are real buyers that can actually buy. All you've got to do now is go find product. Now you've got a real opportunity to grow your business. Yeah.
And it's so funny, because when we're targeting investors on the list side more so than I ever have. I mean, we've, historically represent a lot on the institutional investment side, but they're all out of the market right now. Right. I mean, the vast majority, like, I mean, some that we're doing 20 units a month with are just like, hey, we're pausing right now. We're done. Cap rates
Yeah.
suck,
Yeah.
but what I mean, if you look at the top 57 out of the top 100 metros, you got rents down year over year. So you look at a market like mine, rents are down 6% year over year.
Yeah.
You got occupancy of like your Airbnbs, your short-term rentals that are down like 52%.
Yeah.
So a lot of these investors are feeling the squeeze. So like you said, if we get the listing, it's a win. If we don't get the listing, boom, we can flip them to the investor client. It's a win-win, man. It's so powerful.
Now, if you got the language for it, if you're sharp and you're smart, there's a huge amount of power in saying to a small time investor owner, listen, I want to educate you about something called cap rate compression. And what we've experienced over the last 10 years with rental properties is that cap rates have gone from maybe 7, 8, 9% a few years ago, all the way down to 5%, even sub 4% in a lot of markets. And the reason why they got so low, that cap rates got so low, is because we had the lowest interest rates in 60 years. As interest rates climb, cap rates are going to start to climb, which means that property values are going to start to fall. Right now, we've got a unique window, probably for another year or so, where we still have a lot of demand and cap rates haven't started falling, which means your prices are stable. That's not going to last forever. When you're talking about rent starting to fall in some markets and interest rates rising, there's only one way cap rates can go, and it's in the reverse. You're going to see cap rates have to climb. They will start climbing. So this is an opportunity for sellers to sell right now. And if they're smart, they'll realize it. And if they're not, they won't, but that's okay. But that's a great education for them.
Yep. No, I love that. So then I also was really excited to ask you, because I know that you've had a lot of success with absentee owners.
Yeah.
And, over the years and, today, I mean, what you have 12 million vacant single family attached units throughout the United States. And you get markets like mine. I know real estate's very hyper local, but markets like mine where a lot of people are snowbirds. Well, what we're seeing now with inflation, life's 35% more expensive today than pre-COVID. Yeah. And even though maybe they paid cash for those properties or have a low mortgage on those, it's property taxes are going up, insurance is going up, right? All life is going up there. And a lot of these are baby boomer owned with a retired fixed income. So we're seeing a lot of them have to, instead of being have to pick a home. So we're starting to see the rise of this, so when it comes to, with your experience on absentees, what are some of your top recommendations to have success with absentee owners?
Great points, all of them. And I think the number one reason why absentees were so successful for me is because we understood that the benefit of going after an absentee is they have no attachment to a realtor in the local market. So there's no emotional attachment to somebody they know there. When you're reaching out to them cold, it's okay because they don't know anyone anyway. But the opportunity right now for vacation rentals, also a huge market to go after, but with absentee owners, is here's where I would target, and here's what I would focus on is I would look at the state you live in and look at what's happened with the laws surrounding the tenants' rights in your state. Because during COVID, in almost every state in America, they enacted laws which are very onerous to owners and very powerful for tenants to prevent people from evicting them. And putting, in my state of Oregon, they instituted the first in the nation rate hike law on us being able to raise rents. So it's rent control for the entire state. So, and then we've got all these rules about, now they just turned it in. If you own more than 40 units and you evict somebody, you got to give them 4 months rent or 3 months rent, I think it is. I mean, incredibly onerous laws, right? So, but every state has a similar story. California's got a similar story. Washington's got a similar story. If you look at your state laws and study it, talk to a couple of property managers and say, what laws have been enacted since COVID that are not good for sellers? You'll find, or homeowners, you'll find a ton of them. Get a list of those, put those together, put that in the form of a letter and say, did you know during the last 2 years, here's all the laws that have been enacted that are not in your favor as an owner of a property today. Have you ever considered selling your units before even more of these laws get enacted? Yes, it's a little bit of a play on fear, but it's actually true. Another law that was just enacted in our state, it's also true in California. And I saw a realtor use it in a letter in California. It was super powerful. And what it said was, did you know that you cannot prevent a tenant from opening a daycare in your rental property today? And that was a powerful letter that she was putting out, right? So those are all things that I would focus in on is, what are the laws that have been enacted recently? And is this a reason for you to sell, to pull the trigger, to finally get out of there? Because that would be a big fear point for me, not living in the area, not being close. Another big issue is having their money close to them where they can drive by it and see it and saying, wouldn't you rather invest your money locally where you're in more control of it? That's another big issue.
Yeah. Yeah, no, I love that, man. So then, when it comes to, because I know that you've had so much success with letters and mailer campaigns, what would you say are the differences with expectations? Like from, okay, if I'm pounding the phones, maybe I can get more immediate wins, or get, like letters may take a little bit longer for conversion rates.
Yes.
Or for anybody that's going to do those letters, like what are just some kind of things that, man, you really got to make sure you understand and know this in
Yeah.
order to have success when you're doing successful letter campaigns?
I can give you the numbers, the actual numbers for this, and just we'll break it all down for everybody. So in my experience, for every 100 letters sent, you're going to average one positive response. For every 8 positive responses, you're going to average one listing. So basically, it's 800 letters going out to average one listing. Now, what does 800 letters cost you? 800 letters probably for most of us is going to cost $1,200 to $1,500 if you're having like an outside vendor produce it for you and send it out for you. So $1,200 to $15 per listing taken. But here's where people kind of lose touch. And that is, you still have 7 leads. You got 8 positive responses. You got 1 immediate listing, but 7 more in your pipeline that could and do come to fruition over the next 6 months to 2 years. Generally, about half of those will turn into a listing as well. So now you've got 2-3 listings over a 2 to 3 year period, 1 immediate listing. Generally, that's my experience with these mailings. And it's so funny you bring this up, because I just had one of my students just email me yesterday and said, Jim, the letter you gave me produced, I think he got 5 positive responses from 600 letters and a 1 immediate listing and another listing coming next month. So the numbers can be way better, just depends on your target. But he was using what I call the perfect farming letter. And I'll tell you what the perfect farming letter wasn't. Absentee, it was just a letter using a live buyer, basically. And his perfect farming letter was saying, hey guys, I have a buyer that's interested in moving into your neighborhood, but we haven't been able to find a property that's that meets his criteria. And the reason I'm sending you this letter is I'm not asking to list your property, but I'm curious if you're interested in selling your property. He's not an investor, so we're not looking to discount your price. If you're considering selling, please give me a call. Here was the key language that won him. And every single one of the 6 people that responded said this one sentence was the killer. And he came up with it, not me. It was his idea. He put in there, I see your home is currently valued at X by the county. I think this is low. I would love to talk to you about an accurate valuation. That language was key. And what the key thing with this too is, and the difference between when people are saying, I just do postcards, the thing about this is when you're doing a letter, you're generally being able to insert all these values that you're pulling from your records. So from us pulling from county records, he's able to insert and do a mail merge with that assessed value and say, here, your property's assessed for $483,000. I think that's low. So that was what triggered all these people to call. They're like, yeah, we thought it was low too. They get into that conversation. So that was a real.
Yeah, no, I love that. I love it, man. So then, so, definitely want to get into, as I mentioned before, getting to the team and brokerage side when it comes to agent recruiting, but, any other things that you're seeing from the agent side, any kind of last tips before we transition into the next topic of, again, what to do to create success in this market?
Well, the biggest thing that, we all talk about it as coaches all the time. The big differentiator is visibility and being super visible in the market. I mean, the average agent or the average person in our sphere of influence knows 12 other people that are realtors. So we got, it doesn't matter if they know us or not. It matters that they know us, and then they've put us at the top of the 12. So how do we move to the top of the 12? We have to be super visible, which means we've got to be all over social media, and we got to be doing video all the time. So my big message for my students is the 5-2-2, which is 5 posts a week, 2 stories, 2 reels or videos. So that's like the minimum standard for everybody to stay front and center with their audiences. So that's a basic thing that we're all doing. We also believe in the 1-a-day CMA, which a lot of agents have adopted now. That's doing 1 unsolicited CMA every single day to your database, picking a homeowner just randomly and recording a video where you say, hey, I see you own, everybody's asking what's happened with their home value over the last couple of years. Just want to give you a quick update on what's happening with yours. And then you go through a quick CMA evaluation from them. Probably not interested in selling, but if you are, give me a call, of course. If you know anybody else thinking about selling, I'd love to have a conversation. That has been such a winner for so many of my students. And I picked that idea up from one of my friends who's a ninja coach. And she, out of her 15 transactions she had at that time, 13 of them came from the direct result of the 1-a-day CMA strategy. So we always want to just kind of throw these things away as like, oh yeah, I've heard that before. But have you heard it before and have you done it? Let's put this in perspective. Like, you can hear about it all day long. It can sound good, but if you are doing it is the question mark, right?
Yeah, everybody's looking for that magic pill, but it's
Right.
it's
Like,
the
give me the one thing
fundamentals,
you haven't
man.
heard.
Yeah, I got a buddy of mine that's a brokerage owner. He's got 9 different brokerages, and their first 30-day agent onboarding, they have them do 5 video CMAs a day in their sphere. And he's like, look, man, I don't have an agent that goes through with that doesn't have a listing in their first 30 days.
That's it.
It's just,
yeah. Simple.
Yep. Love it, man. Well, before I get into, because everybody's asking and I know it's tough because we don't have a crystal ball, but you've been in this game for a long time, seen behind the scene moves and not just what the Fed's doing, but also, we just look at the economy, we just had the largest year over year jump in consumer debt that we've had in recorded history, 7.5%, increase. And I look at this like, man, how much pressure, how much pain can the average consumer take before things start to break? And, what's your, and we won't hold you to this because we understand nobody's got a crystal ball, but like, what's your, prediction from being in the game so long of, how this thing's going to pan out?
My personal feeling is that I think the Fed is overcorrecting right now. They're really going too far, too fast. And I think what's going to happen is you're going to see inflation continue to drop, in my opinion. But what might be more really resistant, you got to understand, people don't understand that the inflation numbers that were reported to us every month, 70% of those numbers are made up of real estate, meaning housing prices and rent prices, right? What people are paying for their mortgages and rent. And that's going to hit a wall where it will not go down because of exactly what we said. Interest rates, keeping them high, and all the other factors. That's going to be the challenge point, is how does the Fed get down to their 2% target without breaking the economy? And the meaning breaking the economy is job losses have to start to occur. And when you start to see job losses, you could quickly enter a recessionary period. So I do expect some level of a recession in the next 6 months to 12 months. I do think the strange effect of a recession for us as realtors will be that as soon as the recession really starts to hit, the Fed will reverse course and start to lower interest rates to try to dig themselves out of the recession. So we could see the benefit of that actually on the realtor side. So it's just how deep that recession will be, is my opinion. So I see a small or somewhat of a recession. I see it being a benefit to realtors in a strange way, that interest rates will start to come down. That's my personal opinion. One interesting fact I want to just drop on you is that the difference in yield on treasury bonds are what the mortgage rates are tied to. And if you go back 50 years on treasury bonds compared to the current interest rate, the average difference is about 1.76%. If you look at the yield between treasury bond values and what the mortgages are. Today, people, when you look at that, the number is over 3%. That's the spread has grown to 3% spread. So interest rates are artificially high there too. And you might say, why are they at 3%? Why are we being gouged so much when it used to be 1.7%? And the reason is there's fear about whether we're going to enter a recession or not, and there's uncertainty. Once you have more certainty and people either A, know we're going to recession, or B, know that we're not, that will start to come down as well. So you could have a double whammy where the Fed starts to reduce the Fed rate, so mortgages come down naturally, and then that could compress too, where you have the spread decline quickly, and you can also have, so interest rates could come down even further from there. So there's some benefits out there if we do enter a recession, we get some certainty in the market. So long story short, I think recession probably likely.
Yeah. Well, and speaking of the yield curve, if you just look at the yield curve and the inversion of it, that's been what the most accurate predictor, over the last 50 years since they've been tracking it for recessionary periods, and it is inverted, to a magnitude that there's other times that we've seen this, but it is out of freaking control.
Yeah.
All right. So then now transitioning and switching over to the agent recruiting side, and there's a few things I want to cover here because of course we have, agent recruiting, agent attraction, whatever everybody wants to call, or whatever, others want to call it. But then not only have you been, extremely successful at your ability to go out there and recruit agents, but you've also been great at getting them to produce and retain those agents, right? It's a different beast for each, So speaking of agent recruiting, and I think this market's a prime market, to go out there for these agent recruits because they need leadership. You got a lot of broker owners, team leaders that are, having to retract back into production, neglecting those agents. What are some of your top tips when it comes to agent recruiting today?
So with recruiting, I like to have people think of themselves and kind of reset their thought process. I want people to think of themselves as like you're an NFL owner. You either own the team or you're the coach of an NFL team, an NHL team, an NBA team. And as a coach, your number one job is recruiting. And as brokerage owners, our number one job, or team leaders, is recruiting. I mean, recruiting experienced agents. The biggest mistake that we make as team leaders and owners is we get caught up in the day-to-day and we get lost in secondary priorities. The secondary priorities will eat us alive, and we got to keep our eye on the ball and say recruiting is our number one priority. So what's the best ways to recruit? First of all, the best number one way to recruit, in my opinion, is to have agents in your office today that are producing results. Because when the rest of the community says, oh, your agents are killing it in the market, that makes me want to come to work for you. If you come out and talk to me and you say, hey, I want you to come to work for me, but your agents suck and you're not producing, there's no way I'm going to talk to you. So first and foremost, I got to focus on my agents and say, how do I get these guys to produce? I'm proud to say my team has one of the highest production levels in the country. We're rated in the top 500 agencies in the country, and we're in a small town in Southern Oregon with a population base of 80,000. And Joshua came out and visited us. He gave us a great presentation, but he saw the office. I mean, it was a small little office, but we're doing $1.4 billion in sales. And the reason why we're doing that is because we have to measure our performance as managers and owners by one metric. The one metric we measure ourselves is agent productivity, per agent productivity. So wherever it is right now, if you're at $1 million in agent productivity or 1.2 million, figure it out. What's your last 12 months of productivity? Now you got to say, now where do we want to go? Do we want to go to 1.5? 2 million? What's our number one competitor in our market doing? Is he doing 6 million? Is he doing 5 million? How do I move up the ladder? Because as soon as I start moving up the ladder, this is when people are going to start to look at you and say, oh, there's a great leader. There's somebody who can help me get to my level of production. Now, in terms of actual like hand-to-hand combat, talking to people, the number one way that I've recruited over the years is by having a conversation with every single person that closed a transaction with my team and everybody that wrote an offer on one of my agents' listings. So when you're smaller, if you're a small office, a small team, small brokerage, you start with offers because you're not closing a lot of deals. So every offer I'm gonna call the other agent. The first thing I'm going to do, though, my first step in that process is I'm going to say, Joshua, I see you got a deal. You got an offer came in from Tim over at Remax or Keller Williams or wherever. How's he to work with? He's a good guy. And you might say, yeah, or no, he sucks. I don't ever talk to that guy. But you might say, yeah, he's cool. I like that guy. Cool. You mind if I give him a call? I just want to thank him for writing an offer on one of your houses. You're going to say, cool, because that's pretty cool that I'm as a broker doing that. Now I'm going to call him and just say, hey, I just want to call and just say thank you for writing an offer on one of our listings. We know it's a tough market out there. Every offer counts. If I can help you in any way, please reach out and let me know. That's it. No recruiting yet. I got to build a relationship with you before we start recruiting. He's going to say thank you. I'm going to follow it up immediately with a handwritten note. Hey, Tim, it was great talking to you today. Really hope this deal closes. If I can help in any way, let me know. And just thank you again. And that's that handwritten note. I've gotten so many calls over the years from people that say, hey, thank you for the note, or somebody come up to an MLS meeting and say, thank you for the note. I forgot the note that I wrote. I don't know these people. I've forgotten who they are, but they remind me that, hey, you wrote me a note a few years ago and it really meant a lot. So after that, after I've done that a few times, now it opens the door to a conversation. And maybe after the closing, I'll text them and say, hey, I see you closed that transaction. Congratulations. I'm just wondering if there might be an opportunity for us to get together and just have coffee. I'd love to tell you what we're doing over at our company. And I'm just super straightforward, super blunt about it. And we're not beating around the bush. They know why I'm calling. You're going to say yes or no. If you say no, hey, no problem. I totally understand. You're happy where you're at. If you ever want to have a conversation, I'm here to help. I want you to know that we would love to have that conversation because I see what you're doing in the market. It's really incredible. And now I planted the seed. You're never going to recruit an agent unless they know they're wanted by you, unless they know that you want them on your team. And everybody that's listening to this, that's a broker owner, we've had this experience where we've seen an agent we thought was unrecruitable go to another company. And we're like, holy shit, I cannot believe they moved, right? And you're like, but how many times did you call them? How many times did you send them a note? How many times did you make contact with them? If it was none, then you're the one to blame there, right? If you got to get it back by having conversations. So it starts with relationships. I guess that's my first thing. And then having that great agent productivity and having a great culture at your office. The second thing I would say is you have to have your agents be your best advocates. So if you're doing a great job of delivering value to them, they're going to go out and recruit for you. And that's another great advantage too. The other thing that I've done very successfully is I've turned vendors into recruiters. So all of us as team leaders and office owners have vendors coming in, home warranty people, title people, lenders coming to us all the time. And a lot of times we're just like, no, go away. I don't want to talk to you. I don't have time for you. Bad approach, man. You got to remember that these are people that are going into every office in your community, and they're talking and they're networking with all these realtors. This is an opportunity for you. Every time they want to go to lunch with you, every time they want to go to coffee with you, absolutely, man. Let's go. I'd love to have coffee with you. I'd love to have lunch with you. I'd love to get drinks with you. Let's go. Let's have a conversation. And then when I'm having that conversation with you, I'll say, aside from real estate and what you're typically telling me, how else can I help you, Josh? What can I do to help you? I mean, I really want to know. And you're going to say, well, you can help me this way. And the reason I ask that is because he's going to, by nature of reciprocity, he's going to say, well, how can I help you? And I'll say, well, the number one way you can help me is if you hear of anybody thinking about making a change, I'd love that opportunity to have that referral. And we can keep it confidential, by the way. So, if you hear of anybody, I'll tell you a quick story about that really, really quick. I had one of my lenders do this. He took me to lunch. We had this conversation, went down exactly like I explained it. A week later, he says, I got somebody for you I think would be a great agent. I said, great. She came over, she interviewed with me. I hired her, but here's what happened. I then hired 5 more people behind her that came from the same company. And we literally closed down the company. The company closed after that because they had no agents left in the company because we took them all. And that was from the result of one lunch I had with one vendor. So I can go on and on, but there's a few ideas.
Yeah, no, I love it. All right. So just some follow-up questions unpacked there. All right. So when you're, reaching out to those cross-sell agents, and I know, you start with the offer first, then, the cross-sell, then, because most are probably going to be that, no, I'm happy where I'm at. I think, I heard a stat, I don't know if you would know better than I, but that is the average agent typically makes a move about every 2 years or so. So it's like, okay, they got to wait till they hit that pain point. They're, so then from there, like, are you inviting them to, different culture events, different trainings that you have, to keep that relationship and keep kind of pouring value into them?
Absolutely. So there's like a 4-step process that we try to take agents down this kind of roadmap. But one of them definitely is inviting them to educational events and cultural events that we have. So one of the things you want to have is excellent culture that is visible on the outside of your company. So one thing that we do is we do social nights every 6 to 8 weeks. So a social night could be like a bar night where we all go to a karaoke bar or a bar of some kind. And when we're doing these as a company, we're inviting the spouses. So it's not just the significant others, and spouses are coming along with the agent themselves. But I'm also recruiting any co-op agent that I'm in conversation with. And we're just saying, hey, we're having a social night, no recruiting involved. Just love to have you come by and kind of get a feel for the culture of the company and to have a drink on me. So they're definitely invited. We also do baseball nights and car racing nights and all kinds of crazy things that we do. And then we do some big events. So we do what's called our CAP party, client appreciation party. This is where every agent in our company can invite 10 of their clients, their best clients, meaning their whole family, to a huge barbecue event. We had 1,800 people here at our last one just a couple months ago in June. So huge event. We have a live band, we have food trucks, and we've got wineries and breweries, and it's an incredible event. And again, we invite all the people that we're trying to recruit to come to that. So the experience, like, wow, this is what I get. If I'm coming here, I would be able to take advantage of this and bring all my clients to this. So we're doing that constantly for sure. But the goal is to try to get them into a meeting where I'm going to have an actual recruiting meeting. So that would be my meeting one with them. And that meeting is so misunderstood by most, I would say, agent leaders and office leaders, is they blow the first meeting and then they're embarrassed to ever have another one. It's kind of like blowing a listing presentation and like, I'm never going to do this again. So the wrong way to have a recruiting meeting is to come into that recruiting meeting and start recruiting. It's like a seller. You don't come in and start selling. You have to build trust and rapport first. So at these meetings, the first thing that I always do is I just get to know the agent. So I'll say, Joshua, tell me what you did before you got in real estate. And we'll just have a conversation, and I'll tell them what I did before I got in real estate. So how's it been going? I mean, how's your experience been in the business? What are your goals for the next 12 months? What are you trying to get done? What are your biggest choke points? And we just get into the business side of the conversation. And then 30-40 minutes in, I'll say, well, obviously we're here for a reason. I would love to just take 5-10 minutes and show you kind of what we're offering at our company, if you're cool with that. You say yes. Now I'm going to bring out my presentation, do my song and dance. And then I'm going to take all the gas out of it. I'm just going to say, now, I'm not asking you to make a decision now. This isn't like a high pressure situation. I'm here if you ever decide to come to work for us today, tomorrow, next week, next year, 5 years from now. I'm here when you're ready. And then you'll say, okay, well, that's great. Take it home. I'll follow up with you. By the way, I'd love to set another meeting with you so I can really walk you through the technology pieces at our company, maybe in the next couple of weeks if you're cool. Now that's going to be my second meeting, is the technology meeting. And then I'm going to set it up for a third meeting, which should be the marketing meeting. And then the fourth meeting is a transition meeting where I'm talking about the transition process. We walk them through that process. I will say most people that I recruit are recruited between the first and second meeting is when they're going to join us. Usually at that second meeting where I'm showing them all the technology bells and whistles.
Yep. No, I love that. Love it, man. Yeah. And then I got to imagine that, when you're identifying what their goals are in their business, how it's going for them, through that, you're getting the pain and pleasure. You're getting the obstacles, the objections, the negative portions of the experience that they're experiencing. So then that allows you that much more effectively to share, hey, articulate how you can solve their problems and get them from where they're at to where they want to go. Because otherwise they're just hearing feature benefit and we all sound the same.
Right. And the worst thing that can happen is, you get a phone call and somebody says, well, I'm thinking about coming to work for you. Tell me your commission plan. This is the classic thing that agents do, right? What's your caps, and all that stuff. I never answer any of those questions on the phone. I'll say, well, it's too much to go over the phone. Let me tell you, there's only two reasons you're going to come to work for me. Only two. Either A, I can help you make more money, or B, I can make your life easier. I think I can do both, but it's going to take me about 20 minutes to walk you through that in an actual meeting, if you're cool with it. And that's the truth. That's the only two reasons why people are going to come to work. What happens with brokerage owners and team leaders sometimes is that we get caught up in the commission plan and we think it's all about commission plan. But the problem with that is that it's really not. It's about how many transactions you can help somebody close over the course of a year. The 1 or 2% or 5% differences really don't make a bit of difference if they're not closing anything. 100% of nothing is still nothing. If they're closing 2 deals versus 20. That's the conversation we're having, right? So that's where we got to drive this to, is let me show you how I'm going to help you close a lot more transactions than what you're closing now. And so that's where it's at. And right now, you were absolutely right when you're saying today is probably the best recruiting opportunity in the last 20 years. Last 20 years, it's been tough to recruit when you're in the best market in history. Why are people going to move? Now you're entering a market that's not the best market in history by a mile. So now you're in a mode of rescuing. And now you can throw life preservers to people and say, I've got a solution. I've got a plan. What people are attracted to is winners. And they want an office leader who has a vision and has a plan for them to get out of where they're at. The worst leader we can be right now is a leader with no plan. So if your agents sense that you are lost, that you're rudderless, that you don't know where you're going, you are you are dead in the water. You are blood in the water to me as a recruiter. I will come to you and I will strip you clean of every agent you have.
I love it, man. I love it. All right. So then from there, agent productivity, you let off with, hey, that the best way. Because when people see you out there kicking ass, they're like, hey man, I'm struggling, but all Jim's agents are murdering it,
Right.
But what is, man, it's so many people struggle with this. I have personally struggled with this, at times. It's like, what have you found to be the most important elements to get agents producing?
So with production, it's a tricky road, but I would tell you what's been successful for me is this. Number one, you've got to have personal relationships with agents to the degree that they look at you as a friend. So everybody in your office has to look at you as a friend, that's a personal friend. And you might say, well, that sounds strange. It's not strange. That's the way they got to look at you, because they need to know that you're there to support them through thick and thin. The way I'm going to do that is I got to get to know them on a really deep level. So I'm going to have some deep meetings with them about, let's talk about your real estate business, but let's talk about why you're doing this. What is it you're trying to accomplish? What is their why? And has their why changed? And what's going on in your life, right? But then when I'm talking to them, the first thing I want to do is, okay, if we really want to get you to where you want to go, you're telling me you want to close 20 million, but let's line this out. That's one thing to say it. I need a business plan from you. Let's work on a business plan together for an hour or two. I'll sit with you. We'll work on it. But then we're going to have an accountability plan. Let's have a list of things that you're going to have to do and take it down to the daily. On a daily basis, what's going to take? What are your 5 non-negotiables you have to do every single day in order to hit your 20 million that you want to do? Now, are you okay with me? And I want you to give me permission to follow up with you every week or two on how you're doing. I'm going to ask you, what's your pipeline look? And then we're going to look at what you said you wanted to do. It's going to be uncomfortable, but we're going to get uncomfortable. We're going to get comfortable with uncomfortable conversations, and you're going to be okay with it, right? And now we have set up this kind of system where they're okay with me helping them and encouraging them. So my question to them when I'm seeing them around the office is, how's it going, man? What's going on? What's going on with your pipeline? Where's your lead gen at? Where do you think your choke points are? What can I do to help you? What can I do to support you to help you get past this point? And is it a motivation level? Is it an education piece? Is it some new technology you need? Where are you at? What's going on with you? So if you can focus those conversations around production, now everybody knows the game. And I will tell you, the biggest failure of leadership in every organization is a failure to set expectations. You have to set the expectation. And this is the key thing. As an office, everybody in that office needs to know our goal as a team is our goal for me, my goal is to take 200 listings a month. I want our office killing it, crushing it with 200 listings a month. And I'm going to measure our standard by that. And that means that we have 200 agents. That means every agent's taking a listing at least, or maybe 2 or 3. So now we know my personal responsibility for the company is I need to be taking 1 or 2 listings a month, and our company goal is 200. Every team, every office needs to have company goals that are that simplistic and that simple, and setting the expectations for their agents. All those things, those little things will definitely help raise the game. But the key thing is knowing that you're watching. There's something called the Hawthorne effect. The Hawthorne effect is if you're left to your own devices, we all sink to a level of mediocrity that we think no one's watching us. But the Hawthorne effect is when people are watching you, you suddenly rise. Your performance rises naturally because you think you're being watched. Whole study around this that's been done scientifically. So I experienced this myself. I was a very successful independent brokerage owner. Like you said, I owned 17 offices, and I thought I worked hard, and I thought I was very successful at the time. But then I took a little break, and then I got recruited to come down to run an office that I didn't own. And I worked harder for a guy that I was not in ownership with for the first year than I've ever worked in my entire life, because he was watching me. And that is a really interesting thing, that agents that are not watched, their performance will crater. It'll just go like a zero out. Agents that are watched, their performance will rise dramatically. You got to let your agents know, I'm watching you.
Now, is there, like I look at this when, if I'm running, let's say, a traditional team, and I'm investing up front in leads and opportunities and accountability, then can be on point. But let's just say when it's, somebody that is an independent agent within the organization that is, doing all their own lead gen, that's growing their own business, we're there to support them. Have you ever found that, there's a balance of too much accountability versus not enough,
Oh, yeah.
with that? Because it's like, I don't know. I look at it with my position of like, hey, man, I'm going to be in here running my business, running my team. I don't want my broker owner maybe
Coming and talking to you about
questioning my
anything.
every move,
100%.
right?
Yeah, 100%. So there's some agents and team leaders, like we've got 10 top team leaders that work for me. Never am I in their office talking to them about this, because that's their job. We expect our team leaders to run their own teams and do the things that we're talking about. We treat them as like little brokerage owners within our company. So that's a whole different thing. I totally agree. And there's some agents that are the same way, that are driven enough that they don't need that. But there's agents that are in your office that absolutely do need it. And this is how you're going to raise your game. What every office leader should do, what every team leader should do, is you should quartile your office. Meaning you're going to have the top 25% and the bottom 25% and the 2 middle 25% groups. So your A, B, C, D group. And what your goal is you're trying to move everybody up the ladder. And if you can move everybody up the ladder just a little bit, move people from that D to the C, or the C to the B, or the B to the A, your company will transform extremely rapidly. So it's not like you're trying to get everybody to be A. That's not going to happen. Not everybody's an alpha, but they can certainly move from D to C, right? And so one of the things I measure everybody by, and I tell everybody coming into the company, listen, when you come to work for me, I just measure you by 2 things: participation or performance, right? So I know that participation leads to performance. And here's what I mean. If you're attending training, you're coming to office meetings, you're doing open houses, you're engaged with the company, you're coming to social nights, all that stuff. I know that if you're doing that consistently, it will lead to performance. On the flip side, if you're out there performing and you're crushing it and you're doing all the things that are necessary to be successful, I know I might not see it in an office meeting. You might not come to training. I get it. But if you are not performing and you're not participating, guess what? That doesn't work for me. So you're not going to be with our team very long. You got to be doing one or the other. I'd love to see you do both. So that's where you got to measure people by too. The 2 Ps, we call it the double P.
Yeah, no, I love that. And I'm assuming that then solves the retention issue, right? Because if you get them, like happy agents that are crushing it, usually don't leave.
Exactly. Yeah.
Okay.
Every office and every agent, every team leader is at risk in this market because people's production is down. And so you've got to find ways to get them to raise their game. I will say I love this concept I was told years ago by my coach, and he said, you got to go big and go small every day with your team. And what that means is that going small means I'm going to have a small, meaningful conversation with individuals in the company. So that could be, I'm going to have 5 conversations with people. Going small 5 times a day with different people could be a personal email, thank you letter, whatever, going networking, going to lunch. And then I'm going to go big every day. Going big means I'm going to go at scale to my entire team. Means I'm maybe doing an office meeting. I'm doing a video, which is going out to my closed Facebook group. I'm sending a quick text to the whole group. That's going big. And I got to do that every day to keep everybody motivated, inspired, and kind of focused and forward.
Yeah. So then what are the things that, so on the recruiting front,
Yeah.
what are reasons as to why you wouldn't bring somebody on?
Number one is reputational. I've rejected a lot of top people doing 10, $20 million that just didn't fit the reputational model. But I'm going to flip that on its head for a second. So reputation is number one for me. But you've got to measure this reputation, not by what you've heard, but by what you've experienced as leaders. So I'll give you a classic example. I had a guy that came and we had him coming to work for us who was a top producer, top producer. And I had 3 agents come into my office and say, if you hire him, we're quitting. And every broker will go through this. We're going to quit because we don't like this guy. And I said, well, I've met with him and I've talked to him and I've never had a bad experience with him. I think he sounds like he's great. And I think he's at a place in his career where he's ready to turn the page on maybe how he was behaving before. I believe that he'll do it. I just have one question for you guys, you 3. Do you trust me? You either trust me or you don't. Do you trust me? And they said, yes. So I want you to trust me as a leader to make the right decision. If this person comes in and they step 1 toe over the line, I'll cut it off and I'll fire them myself. Okay. So if you trust me, let me do this. Long story short, he came to work for us, became one of our top producers, and is beloved by every agent in the company. Every agent loves this guy now, but they had to get past this point of fear, right? So we have to be strong leaders and not let the tail wag the dog. You know, we're in charge and we got to act like we're in charge. But that's the number one reason. Reputational is why I wouldn't hire somebody.
Okay. So then you mentioned, okay, if they're not abiding by the 2 Ps, then it's getting, you know, so at what point, at what point do you give somebody the X?
Well, I give them a warning. I give them a couple warnings. I call it a dehiring process. So my dehiring process would be, hey, I bring you into my office and I say, listen, you know, I'm just noticing a trend here that I've looked back at your production over the last 6 months. It doesn't look like you're working much. And you're also not attending a lot of office meetings. You're not engaging with training. This isn't working for me. You knew the 2 Ps coming in, right? Participation, performance. I don't want to let you go, but I'm going to have to if this continues. Here's what I'm going to ask you: are you ready to recommit to the business? Because if you're ready to recommit, I'm willing to take the ride with you, but you got to really recommit. So are you ready to recommit? And if you are, I want a game plan of what you're going to do over the next, let's say, 30 days. And then we're going to measure their performance for the next 30 days. I have what's called a daily dashboard I use with agents and my coaching students. And it's a complete outline of what they're doing every single day, calls made, you know, FSBOs, contact expireds, and, you know, all the absentee owner mailings, all the things that we're asking them to do. And they're diligently writing down how many hours they're doing, exactly specifically what they're doing. And now I'm going to say, you're going to turn that into me every Friday, the daily dashboard, to make sure you're performing. You're doing what you say. I want to see it every training, every event. And if you're not willing to do that, I get it, but you can't be here. So, and then if they say they're going to do it, which most of them will say, I'll do it, Jim. And then they still don't do it. I call them and say, hey, you didn't do what you said you're going to do. I got to let you go, buddy. That's it.
Yeah. So what is the, you know, percentage, if you will, you know, that you're having to make those removals?
It's a very small number for experienced agents. I will say most experienced agents I bring in, they're experienced. They've been in the business over 2 years. Very rarely do we have to fire them. Very, very rarely. The people that you have to fire most of the time will be new agents that don't commit completely to the business. I don't hire a lot of new agents. I learned early in my business. Quick story about that. As a brand new 24-year-old, I thought the only way I could build my company was with new agents. So every month for 5 years, I did a recruiting seminar. So I'd do a hotel room, put an ad in the paper, and I get 50 or 60 people come in. we do this big rah hour and a half event. People would say, I want to get in the real estate business. They'd go sign up for the real estate school. We get 4 or 5 of them to complete it. I'd hire maybe 1 or 2 of them. And I thought I was doing a really good job because I was building my company to 20, 30, 40, 50 people. But what I found is that 8 to 9 of them would fail over the first 2 years. And it wasn't me, that's just the numbers. So we got all this energy and the time that goes into these people that are not going to succeed. So I pivoted 5 years in, we started going after experienced agents, and then, the doors were off. We just ran. So you got to be very, very careful with building your company with new agents. Okay, to sprinkle a few in, it's great, but really vet them really, really hard. Don't hire everybody.
Yeah. Yeah. What have you found? I know that you don't go after them, at this point, but what have you, because man, people can interview really good, and people can, they can sell you in that interview, man. I mean, I can't tell you how many recruits I've had where I'm like, oh my gosh, this person's going to be a rock star. And then they get in, they were maybe a rock star in their last sales position where they have the accountability as a W-2, salary, whatever. Yeah. Then they jump in here and boom, flop. And then I've had the opposite where I'm like scratching my head. Oh, I think I made a mistake, and they shock the hell out of me and do amazing. Right. So what do you do in that testing phase, to really interview and test them if you are going after new agents?
So, well, I learned this strategy from, I taught a seminar in Australia a few years ago. And when I was in Australia, their whole model in Australia is completely different for real estate agents. In Australia, and what those junior agents do is they work 50, 60 hours a week, and all they do is cold call 50, 60 hours a week. And they're not allowed to, when they have a success, and I thought, you know what, I need to start using my thought process with new agents around this. And that's where I started using the daily dashboard. I started telling people, listen, we're gonna say to you, you're gonna sign an accountability form coming in. What the accountability says is, for the first 90 days, you're with me. You're gonna do these 10 things, and we give them a list of 10 things they're gonna do. Attend every office meeting, attend every training. Use the daily dashboard. You're gonna do all my coaching classes. All these 10 things you have to do. You're gonna sign that, and then you're gonna have this daily dashboard you're turning into me every Friday. Are you willing to do that? And they're gonna say yes or no. And if they're willing to make those commitments, I'm usually willing to take the ride. But you're right. There's no crystal ball. I'm not right all the time either. I get it wrong all the time.
Yep. Yeah. And then, within the first 30 days, based on the activities, if they're serious or not. So, exactly. All right. So, a common challenge that I hear, especially from team leaders and broker owners in those earlier stages, especially when they're in production themselves, they're trying to build up agent count, company dollar to get the point to exit from production, but so often, let's just say maybe they're at 5 agents and they're building this thing up. Well, next thing you know, they've allocated so much time to their agents where their production then drops off a cliff. Yes. Their agents aren't producing yet, puts them in a world of pain. It's the most common thing that I see, new broker owners and new team leaders make. Yeah. How do you balance this? How did you balance this? As you're building up?
And I went through exactly this. I mean, I was one of the first team leaders in the state of Oregon. We were in the early 90s. We were a team before anybody was doing teams. So we exact experience. Thought we were, when we measured our performance, me and my buddy, we had one assistant. We were number 2 in our little area in Roseburg, Oregon. We thought we were crushing it. We were working for Century 21. If we break our business off, we're number 2 in production. We can do this. So we go buy an office. And then it's just me and him looking at each other, and immediately our production creators, right? Because you get focused on everything else. And so we lived and experienced this. But what I coach people to do now, based on my failures and my experiences, you need to understand what production needs to happen in your company to replace your income as a top producer. So if you're making $500,000 a year, you need to understand, okay, if my average agent, when they close a transaction, makes me $2,000 net to me as a team leader, or $3,000 or whatever the number is, I need to divide that into the 500,000, understand how many transactions there need to be happening aside from my production in order to replace my production. And I don't get to lead production until I've got my team built up to close in those number of transactions. That's the threshold. You have a threshold point you're building to get to that number. Now you may exit a little bit early, but that's the numbers you're looking for. You got to, but most team leaders are not, for whatever reason, great with the number side of the business. They're great with sales, but they're not great at crunching the numbers. But we have to take some time and go, okay, my number is, I got to have this team closing 20 transactions a month, and then I can exit. And what the tendency is to do is like, oh, I'm going to exit early because I just want to get out of production so quickly. I'm just sick of it. And it's too early most of the time. I'll tell you the other huge mistake that team leaders make in my experience, and they're going through the pain of it right now, and it's very painful, is that they built their teams based on buying leads from Zillow or Realtor.com or some combination of that. And so the buyers agents on their team, so their team people have their hands out every day, like, I need more leads. I'm not closing enough leads. You got to give me more leads. So they have their hands out all day long. I want more leads, give me more leads. And the team leaders are kind of feeding the machine and buying more Zillow, buying more Realtor.com leads. And those are all kind of collapsing. It's that whole model doesn't even work anymore. And so we have to start to say to ourselves, we can't look at ourselves as just being a lead machine for these team players that are on our team. But we have to look at ourselves as team leaders as more as a business consultant and a coach. And we're coaching them to develop their own leads, and we're here to support them to build their own leads. That's our job. It's not to deliver leads, it's to coach them to create leads. And when we have that kind of mindset shift, that's when we're going to start to create a great team, in my opinion.
Yep. Love it. Couldn't agree more. So then, a couple last questions for you, but before I jump into those, for anybody that's watching or listening, if they want to continue following you, if they want to get in touch with you, I know you've got, several great coaching programs, agent coaching, you also do a lot of broker coaching, team leader coaching, helping them grow and scale their brokers and teams. If anybody that's watching or listening wants to, again, follow you, continue watching your content, get in touch with you, have a conversation about your amazing coaching programs, like, where's the best place to do that at, Jim?
Everybody can follow me at Real Estate Coach. I'm on all the social media platforms. E as an elephant, Real Estate Coach. Also, realestatecoach.com will get them to my website where they can learn all about our coaching platforms. Love to have a conversation.
Yeah, and so I know that you. I'm just trying to go off memory here. I mean, you've got agent coaching platforms.
Yes.
But then you do a ton of, broker owner, team leader coaching to help them scale as well. Is that correct?
Exactly. We're coaching teams and brokerage leaders from across the country. We're really proud of their performance. We got a lot of people that have just really, really grown, and we focus on recruiting, retention, profitability. We get together twice a month for hour-long sessions and really just help hone them in on growing their companies.
Yep. No, I love it. So, all right. So then, a couple last questions for you with technology and all this AI and there's a lot of fear that exists out there in a lot of different industries.
Yeah.
What is your because over the 30 plus years you've been doing this, you've seen a lot of changes. What is your recommendation as far as how to incorporate and leverage this advancement with all this technology in a way that, I know there's a lot of fear of replacement, right? Now, I'm not one that thinks we're going to be replaced. There's too many moving pieces, but there's so many amazing tools that can be leveraged for us as realtors. My concern, though, is if we're not careful, we can also allow it to make us a commodity from a relationship base. And then, then the replacement factor then increases.
But I love it. I love technology. So I'm always talking to my students about it, but I think that the agents that are going to really scale over the next 5 years, even maybe 2 years, are the ones that do embrace AI. So I think you're either going to get on top of this horse and ride it, or you're going to get run over by it. So it's going to be one of the two. You can't just stand out there and just clap as it goes by, because that ain't going to work. So what I'm recommending to my team leaders, brokerage owners, and agents is you don't want to be on the bleeding edge. You want to be on the cutting edge. So that means you're watching and you're selectively choosing what technologies to use. You can't use it all. There's like 10 new AIs rolled out every day. So you got to pick the ones that are actually going to work. The ones that I'm using myself, the ones I'm recommending myself to my own students, of course, ChatGPT, of course. But I'm also using something called Writesonic, which is a great one, Writesonic.ai, which check this out. Here's what Writesonic does. Writesonic will say you want to write an article about something, and you've gone to Google and you found, hey, here's what I want to write about, but you don't want to take the time to write it, because who does, right? So you go to Writesonic, and Writesonic will reach into the internet, and it's basically an overlay of ChatGPT 4, but it will reach in and will pull out 20 articles that have been written about the topic you want to write about. You can choose all 20 articles, or 10 of them, or 5 of them. It'll take all those, amalgam together, and write an article for you. And then you can add your own voice to it. And it's really powerful, and I've used it a lot. So here's a little tip for everybody that's trying to get your SEO, your search engine optimization on your website up, is if you want to go down from page 20 to number page 1, start implementing this strategy every week, is you go and use Write Sonic to write you an article about a topic that is related to your marketplace, something specific to your market, and then start posting those to your blog, your website every week. Now, I've taken it one step further. I'm using 11 Labs, and 11 Labs is another AI. Check out what 11 Labs does. 11 Labs will take a recording of your voice, okay, and it will create a AI version of your voice. So now I take this article that's been written by Write Sonic, I feed it over to 11 Labs, and it gives a recorded version of my voice, what sounds like my voice, but is actually AI. So I can create 10 articles today with what sounds like my voice and post them on my website to help my search engine optimization. It would take me 5 weeks to do that in the real world, but I can do that in a day. And I did it. And if people are interested in hearing what my AI voice sounds like, if you go over to my website, erealestatecoach.com, go to my vlog, you'll see a few articles there, and you'll quickly see which ones are my AI voice. But it's so good, it tricked my wife. I said, come here and listen to this. What do you think? She said, it sounds pretty good. So it's not me.
Yeah.
It's my AI voice. So anyway, 11 Labs. That's a little bit of cut. That's a little bit of bleeding edge, but I like that kind of stuff. But Write Sonic is really good for writing. It also does your Google AdWords. It'll write that, LinkedIn articles, all kinds of great stuff, tech like that. It's a lot like Jasper AI. If anybody was using Jasper for a while, I was using Jasper for a long time. In my opinion, it's better than Jasper. Another one that I'm excited about is Opus. I don't know if everybody's seen Opus yet. You've using it? I think I've seen your Opus. You're using it?
Yeah. I mean, I've been testing it versus my film editors.
Yeah.
And man, it's not quite as good as the results I get, and obviously a YouTube short, even though it's the same thing, performs different than a reel, based on placement, but man, it's pretty damn good. And
pretty good, right?
$20 a month. It's stupid cheap.
I know, right? So that's that one. For those of you that don't know, takes a whole long video like what we're doing right now, automatically cuts it into like 1-minute segments, which you can then push out on the reel, and it puts the overlays on for captions and stuff. Really, really cool tech for $20 a month. And I'm going to give you one more that is super cool that I've been using a lot. It's called Gamma, GAMMA.app. It's not AI, it's .app. So we as realtors, a lot of times we use PowerPoint to create presentations. And one that everybody should build right now, because of the 2 lawsuits that are going on, is you need a buyer presentation. All of us might tomorrow morning wake up and say, oh, guess what? You got to start collecting fees from buyers. Imagine that. If everybody woke up tomorrow and said, you got to start asking buyers for your fee, what a shocker that would be. We can start getting ready for that by having a buyer presentation, whole nother conversation. But a lot of us don't have a great presentation. Maybe a lot of us don't even have a listing presentation. What Gamma does, it's AI that will build your PowerPoint presentation in about 5 minutes. It's absolutely stunning. You write it out. Hey, I need a presentation for home buyers, first-time home buyers, whatever. And you put a little paragraph in about what you want. It'll kick out a 10-page, beautifully, visually stunning presentation. It's absolutely amazing. So we're using that a lot too. Relocation presentation, all kinds of things. We've used it for a lot of things.
I love that, man. I love it. So then, I wasn't planning on asking this, but since you brought it up, speaking of this lawsuit, a lot of people are nervous. A lot of people wonder what's going on. Throughout my career, I think seems like every other year there's, some type of something going on that's going to change commission structures. And, I've got some different mixed personal feelings on this one, but I mean, from your assessment, you think it has some solid ground?
Well, I've been watching this for years too. I mean, the Justice Department, everybody's came after us for commissions and trying to break down our commission structures in this industry for literally the last 20 years, really. There's been one lawsuit after another. These are different. This is serious, and it's probably going to result in a change in how we're doing business, in my opinion. And I'll give you just one indication of that. And it was reported in the news, I think it was a week or two ago, that there was an MLS in New England, MLS PIN, that settled with this people that were filing this lawsuit for $3 million. So they said, okay, we don't want any part of this. Get us out of this lawsuit. Here's $3 million. What do they do with that $3 million? The litigants gave it to their attorneys and said, we're going to give you all this money to keep fighting. So it's not like this is going away at all. and you got these big players involved, I think there's change coming for our industry. I don't like it. I think it will make it much harder for new buyers to get into the market if they suddenly have to start paying fees, even if they're financed, because it's just going to add to their payments and all kinds of crazy things. It could lead to commission compression too. So I'm not a fan of it. I think it's bad for the industry, but I think that there's change in the water. So the best thing you can do as realtors is assume it doesn't happen. And let's hope it doesn't. Let's hope our industry continues on as it is. Even if it doesn't happen, we should all get better with the way we work with buyers. And so we should all create a buyer presentation, start treating buyers just like we treat sellers, with a full consultation. And at the end of that consultation, we should shake hands and say, hey, the only thing I ask for is your loyalty. And they shake our hands and we say, great, I'm looking forward to working with you. If we just do that, we're beating 95% of our competition. But be prepared that we may have to go one step further and say, and the way I have to work with all buyers is with a contract, and here's what it looks like. That could be the evolution of it, but we can get ready early. Just kind of a little backstory. I mean, I taught the ABR designation for 10 years for NAR, so the accredited buyer representation class. I highly recommend every agent in America goes and takes that class right now, just to get ready for a potential change in the way we're collecting fees.
Yeah. I mean, when I look at it, I mean, I guess I kind of don't understand the grounds the lawsuit has. Now that doesn't matter if it's gonna, it's like, well, it is it is disclosed,
right.
So but who knows? It's gonna be what it's gonna be, and we gotta.
Yeah. I don't agree with it either. 100%.
Yeah, and then I saw a lot of agents freaking out about like Bright MLS. Just change where that's got to be disclosed on the MLS. Well, a lot of MLS has been doing that. Like
that's common. A lot of
yeah.
places.
I mean, during COVID, I mean, we had, when things were just at that peak of craziness, we had certain listings that were offering a $1 co-broke,
Yeah.
but then it's like, okay, those just don't get shown and, whatever. So, it'll be interesting to see how it pans out. So, all right. So I know that this last question here might be a little bit repetitive, from things that we've already talked about, but just kind of as we end here, in this, crazy times that we are in, and maybe even crazier times that we have to go with, and maybe not, when I say crazier times, might not be market driven itself, but with technology driven and whatever, what are some, kind of top inning piece of advice that you would have for any real estate professionals in this industry, with this market that we're in and going forward, just to ensure that they're prepped for success?
I think the biggest thing that agents need to do, and it hasn't changed in 30 years, and I don't perceive it changing for another 30 years, is that when I talk to the top teams, the top agents in America, it's not that they're in a transactional business, that they're in a relational business, and they understand that. And so when I talk to people closing $100 million or $200 million a year in business, and when they tell me, hey, I just closed a deal, they say, I just closed a deal with my buddy. I just closed a deal with my friend. I just closed a deal with my guy that I've been working with for 10 years. These are all relational things, right? And it's the thing that's what's going to drive the success of all of our highest level businesses. These agents that are transactional, that it's all about just getting another notch on the belt, we're just trying to get transactional numbers. Those people will have a challenge in this market. The people that are going to win are the ones that have the best relationships with their clients. And I look at it with my financial professional. I have a guy I work with for years, and he is connected literally with, I think, every person that's got any level of money in my community, because he's built incredible relationships with people. And, you can go online and you can use all the different financial tools, E-Trade and all this other stuff. We're not doing that. We're happy to pay this guy because he's a great guy and he has personal relationships with us. It's the same thing with the highest level professionals in our industry. They're the ones that have the best relationships. So my message is to everybody is figure out how to get closer to your clients, figure out how to have closer, tighter relationships with people. And here's one challenge I would give to everybody is think about your top 10 clients from last year, top 10 clients of 2022, 2023, halfway through this year. How many of you know the personal aspirations of that person, their aspirational goals? Like, do you know what they want to do in their lives in the next 12 months? They want to go skydiving, they want to write a book, they want to open a business. If you don't know the answer to that, you're not close enough to your clients. You're just treating them transactionally. You got to get closer. You got to get to a place where they think of you as a friend, and then your business will change. Then you'll have dramatic change. That's my opinion.
Yep. No, I love it. Such powerful stuff. And Jim, truly appreciate you taking time out of your busy day to be here while you're also out of town on vacation.
Yes, thank you.
So, yeah, this means a lot, man. Truly means a lot. And just for those, just in case anybody watching or listening is driving down the road, because we get a lot more audio podcasts. Can you just repeat your website again?
Yeah. So erealestatecoach, E as an elephant.com, erealestatecoach.com. Love to have you come over and check it out.
All right, you guys go check it out. And thank you so much for watching and listening. We will see you next time. Peace.
Have a good day.